You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Of course, we're coming at you live here, 1 p.m. Central, 2 p.m. Eastern on a Friday here. Friday the 13th. Happy Friday the 13th to everybody out there. An auspicious day, to say the least. A lot going on out there for us to sink our teeth into. Of course, listen live or after the fact. We love it. We welcome you. Make sure you're sending those questions, those comments, those insights, those pearls of wisdom. We do indeed like to hear from you guys. And joining me on the old program today, let's see who we got. Holding down the MIAX hot seat today. He's doing double duty. He is the greasiest of meatballs. Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to the Volatility Views program, sir.
May I just say how hot my seat feels right now? I can't remember the last time I had such a hot seat. But I got to say, maybe that's appropriate because I'm fired up about being blatantly ripped off, which we'll get to in a second. I'm fired up about a new vol product that's coming up. I'm fired up about trade deals that may or may not be in phase one. I'm fired up about just an endless amount of things I'm fired up about today. Thus, it would make sense that I would have a hot seat.
Yes, it does make sense. We're all fired up, so let's keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the program where we break down what is hot, what is moving, what is lighting up the tape. But before we get to all that, Mr. Meatball, you just alluded to at the top of the show, you and I have indeed been ripped off, and ripped off pretty hardcore and we need to get to the bottom of this. You shared with me before the show. Listeners, you may remember last week, the Greasy Meatball and I had a heated discussion, nay, debate about the issue that is really dominating our times. That is, of course, who is the cutest? Baby Yoda. Or indeed, we threw in an extra wrinkle from the 80s. Good old Gizmo from the Gremlins movie. Think back if you haven't seen it in a while. He was pretty cute. So it was a heated debate. We ended up putting it out to our listeners for you guys to decide. Mr. Meatball, I'm sure you didn't see the final results. Which way do you think our audience ended up leaning, sir?
I'm going to say it went wildly in favor of Baby Yoda. Although I would maybe argue that the reason why Baby Yoda just looks cuter is because the Gizmo was an older puppet from the 80s, and they did not have quite the same puppet technology that they have for Baby Yoda.
Yes, they've upped the cuteness factor substantially. But yeah, fair to say a lot of it based probably off Gizmo and his movements back then. But you are right, our audience overwhelmingly leaning towards the flavor of the moment. Baby Yoda, 79%, a paltry 21% for Gizmo. A strong write-in campaign, I should say, for Baby Groot. So maybe we erred in not putting Baby Groot on that list as well. That's also a strong dose of cuteness. So the three of them, maybe next time we'll have a three-way battle. Or perhaps a two-way, because Gizmo unfortunately did not live up to them. But I'm digressing from the main point, Mr. Meatball. We have, of course, put this out there to the world, this face-off of Gizmo versus Baby Yoda. And what would you send me this morning? I'm not sure where you found this. This might be like a Cafe Press thing or something like that. But someone clearly inspired by our debate here put together a T-shirt, or a sweater, actually, a holiday sweater, featuring Gizmo with a Santa cap, looking down at Baby Yoda, also dressed up in a Santa cap and a Santa Claus outfit. So I say, Mr. Meatball, I think we need to demand our royalties from this, or perhaps put out a cease and desist. What do you think?
I could not agree more. I was searching for a Baby Yoda Christmas sweater for myself and my sons to wear together. By the way, they cute one with a picture of Baby Yoda, and it says, "What child is this?" Which is really funny. And as I was scrolling through, I'm like, wait a minute, is that can't be. What's going on here? And yes, somebody blatantly ripped off the Greasy Meatball and the lean, healthy meatball that is Mark Longo, and stole our Gizmo versus Baby Yoda idea. It just goes to show again the power of this radio network and our ability to, as pop culture icons.
Yes, we are influencers extraordinaire. You're breaking up a little bit there, so I'll let you get where you're going while we move on to what's lighting up the tape in the actual volatility space this week. It was a mixed end here to the week. Now the market's turning more towards the green. You would think it would be a firmer move to the upside than perhaps we saw, of course, for the last couple of weeks now. The mere hint, the mere suggestion of any sort of detente in the trade war was enough to send us rocketing up 0.5%, 1%, easy, no problem. Now we actually have the first phase, I guess you can call it, of a detente here with China. We officially announced a trade deal, reducing some tariffs. China promising to buy more U.S. goods, in particular some agricultural goods, which has been a sore spot here. Of course, the trade war, if you listen to Twifo, you know it's hit the ag sector very hard of late. So trying to undo some of that damage. Some of that may not be able to be undone. The Brazilian market for soybeans has grown in the wake of our tariffs. It's hard to get that back to the U.S. So some of that damage may be pretty much difficult, if not impossible, to overcome. But c'est la vie, you would think would be a positive thing for the market. Also had, I guess the Brexit thing is a little bit more 50-50, depending on how you view that. But still, you'd think the notion of actual progress on the trade war would send us soaring to the heavens. And yet, the market kind of shrugged it off. I guess they expected more. They expected a better deal from all the promises that are out there. As we're coming into showtime, we were mixed. Now coming into the start of the show here, we're seeing most things pretty much turning into the green. Dow and S&P are effectively unched. They're slightly up, but effectively unched. The NASDAQ up about 0.25%, so that's more firmly in that upside direction. Gold and crude also up as well. WTI threatening the 60 handle right now, 59.96. So continuing to get a lift here in the wake of the Saudi Aramco IPO, apparently. So, and gold also up 1480, just ticked up to 1481. So, threatening that 1500 level. If you like metals and debunking the mysteries of metal skew, which they are surprisingly, shall we say, contrarian. Check out the TWIFO episode. We did it live, of course, yesterday. Just hit the network today. I did it with Eric over there, one of the senior economists at CME. Fascinating, surprising findings about volatility skew. Not exactly what you would think at all. Oh, the calls are bid. What does that mean for gold? Not what you'd think, which is kind of surprising. Let's move out to the vol products now. Of course, like we said, they were a little higher to start the day as things were mixed. Now that we're clearly into the green, the vol is coming off again. Coming into Showtime spikes was at about 1330. That put it down almost a point, about 0.95 from where it was last show. VIX cash right around a similar level. So spike's no longer pregnant with that dividend premium from SPY, getting a little bit closer to the VIX cash. VIX cash is at about 1320 coming into Showtime. That's down about a third of a handle from last show. VVIX is still north of 100, of 101 actually. It's off a little bit from where it was yesterday on the option block, but still up nearly 7 handles, about 6.5 handles from where it was this time last week. All right, Mr. Meatball, lots been popping off this week. We'll get to the new product in a second, but first, what is catching your eye this week from a volatility perspective, sir?
Yeah, well, I mean, let's think about this. We are about 100 points higher than we were a month ago. So you've got a market that is still unsettled. It's still moving around. There's still some perceived risk out there. I think that, there's still some thought that, hey, maybe this phase one gets unphased one. Is there a sell the news aspect of what's going on here? They've spent a lot of time building up a trade deal. And so, you don't know what's exactly going on there. Brexit, yeah, again, like you said, good or bad, who knows? But at least there's some certainty. I think markets would certainly agree that Mr. Corbyn is not a good thing for financial markets. So that would probably be, at least on that end, a positive for the market as a whole. The Fed's out of the way. So, there's not a lot of great reason for there to be a ton of vol, yet it's still there. So, and it's expressing itself in the VIX being, 13 and a quarter, spikes 13 and 30. It's expressing itself in VVIX at 100. And I'm going to guess that the Viking would probably be somewhere around there as well. And so, I would also point out that bonds are really strong today. So you got to ask yourself, okay, what exactly is going on here? And so I don't know, but I can tell you that if you think markets are settled, they're not. You got to wonder whether there is some sort of sell the news being set up with how expensive it is to buy premium here.
Does seem like something perhaps lurking in the weeds out there. Speaking of things lurking, Mr. Meatball, we can't delay anymore. We have to get to this. I saw you tweeting about it the other day. People have obviously hit us up throughout the week about this. You're going to talk about this on Vol Views, so let's get to it now. Obviously, I've lost track of how many times over the course of the past year and change since February of 2018 that people have written into us. I'm going to say conservatively a couple of dozen, probably a lot more, that we've actually mentioned on the show here. When are we going to see XIV2 effectively, a new product that allows the masses to come in and fade vol the way they did with XIV right up until it imploded? And then, of course, the regulators, for a while, they're deciding, this is probably not a space we want to go back into. A lot of people in the industry were very divided on this as well. A lot of people thought maybe the brokers in particular did a very poor job of gating that product and making people aware of the risks of it. They put it up next to a SPY and some of these other broad-based ETPs and ETFs that have a long track record that don't have the same lurking risk that XIV did. So there were a lot of products, and a lot of problems with it. People have asked us many times when we think a new one's going to come back. And we've been saying for a while, we don't think, at least when we first started getting this question back in March of 2018, not for a while probably, and it has been a little while now. It's been about a year and a half or so, and apparently someone thinks that's enough because big piece out of, I believe this was Bloomberg that was mentioning this, saying, hey, and it's not a big player anymore. It's not a Barclays or someone else. It's actually a startup deciding the time is right to wade back into those waters. The article, in case you missed it, listeners, is called "The Ghost of XIV Rises." A new short vol product is in the pipeline, and this is a firm. Obviously, it's new, so I'm not familiar with them. It's called Volatility Shares LLC. I'm not familiar with the partners as well. Maybe I'll have to get them on the show to pick their brains a little bit about why they're deciding to wade into these blood-filled waters. They say Vol Shares is a partnership formed by Stuart Barton and a couple other guys, Justin Young, Michael Venuto, Guillermo Trias. They're formerly of Toroso Investments. Another firm that I'm not familiar with. They say they're planning to have this product available, which surprises me, early 2020. I would be very surprised if this passes regulatory muster and is available to trade. Look what just happened with the Spikes futures. I mean, that went all the way to fruition. That's just a simple, effectively vol product, long vol product. There's no leverage or inverse or anything like that. And yet they had to take that off the market. So inverse vol product getting approved by then, that would be interesting. What they mentioned here in the article, they say Feb 5th was a problem that the original architects of those products hadn't foreseen. That left a gap in the markets. We were asking people to provide a solution. Nobody stepped up, so we did the research and legwork and hoped to bring a solution to market, making a few tweaks. First off, instead of an ETN like XIV was, which is, of course, an exchange-traded note, listeners, they're going the ETF route, which is maybe a little bit more palatable to some folks out there. They're going for the ticker SVIX, and they're going to track the short VIX futures index, which, again, according to these backers of the product who clearly have an axe to grind, but they say that back test would suggest only a loss of 30% back in the Febocalypse versus the effectively wipeout of XIV. And he also mentioned some methodologies for constructing it a little bit better and getting rid of the end-of-day rebalancing that XIV had. He thought that was a primary weakness that they were allowed to exploit. They actually proposed instead a 15-minute time-weighted average price. Kind of interesting. It seemed like it was a space that was waiting to be filled. I wasn't sure if we would see it this soon, but apparently now is at least the first of these people tilting at this windmill. Mr. Meatball, you obviously have been commenting on this week. What are your thoughts on potentially the return of XIV, sir?
Well, I think that they've got kind of an XIV 2. They've definitely made some improvements. They're able to go into the over-the-counter space. They're going to hold physical assets, which I think is good. They were touting this 15-minute VWAP as, something breakthrough. I'm not sure I buy that. I think that, I think that's just as easy to push around at the TAS market. And I disagree with one of the pieces that they had said in the piece was that, XIV blew up because of front running, or at least that was partially accused. I agree with that at all. So, do they have something that won't blow up, that can't blow up? No. Based on what I'm reading, will it take a little more? Yeah, I think that they do. They could. They could absolutely avoid something. At least with what happened on. At least with what happened on February 5th of last year.
It'll be interesting to see, because XIV obviously had that time bomb baked into its prospectus. I always said it was the most scary prospectus I'd ever seen of this, what they termed this great euphemism of the acceleration event that could happen at any moment. And that could effectively shut this thing down at the snap of a finger, and that's effectively what happened. You're right, I was kind of a little bit taken aback by their allegations of behind-the-scenes malfeasance that effectively caused the end of XIV. It seemed like it was an inherent structural issue of the product itself. Maybe some late-minute play at the end of the day accelerated it. I don't think it was caused by that. I think there were a lot of other fundamental issues with that product that anyone who took a look at that prospectus could clearly see. It remains to be seen. Obviously, we have to see a prospectus for this to see what the heck they're planning to actually do to avoid that a repeat of XIV out there. Also, that's going to be a key point for the regulators. Again, I'm surprised they got a piece printed in Bloomberg about this thing. This thing seems like it's a bit of a pipe dream right now. But hey, good on them. They got we're talking about it now here on the show, so they're getting their PR work done, which is kind of it. And clearly, it's a space people are interested in, so people want a new product for this. I think surprised is an understatement if this thing plays out the way they say, and that we actually see it in early 2020. Mr. Meatball, what do you think about that? What do you think about their proposed time frame of having this ready to go, approved, and tradable in early 2020, sir?
I think that's going to be a tough haul. I don't know that 2020 is going to happen early, but I think that they could get it done, next year. But I think Q1 is unlikely to happen. I would not bank on that. Let's just put it that way.
Yeah, that would be a challenge. Again, look at the issues that we saw a large, established, regulated exchange group have with launching a new, just straight up one-to-one volatility product, and how long it took, and even the issues that could crop up at the last minute. That should give you some insight into how challenging it is to launch any new product, let alone a volatility product. Now you're coming to the regulators as a startup with effectively no track record, and this new attempt at a product that already wiped out or had issues, caused a lot of problems for a much more established financial entity. I would have to imagine the regulators are going to take a second look at this. Not to say I don't want a product like this back. I think there is interest in this space. Obviously, the devil is clearly in the details there, and we still know very little of the details. So good on these guys for getting a little bit of ink for themselves. They're getting a little interest, and maybe that'll lead to something interesting. If we hear a little more, if this thing develops over time and it seems like it's going to be a credible product, we'll make sure we get these guys on so we can pick their brains directly. But for now, it seems like it's firmly in the wish fulfillment kind of category. We'll see if this moves closer to an actual, tangible, tradable product we can sink our teeth into. Speaking of tradable products, unfortunately, Spike's futures still halted, so we'll wait to see more about that, but they're still working out the nuances. You heard Shelley on the last show talking about how they kind of did it as a proactive step because there is effectively a bit of a jurisdictional squabble between the CFTC and the SEC over who should have domain over this product. And, whenever regulators squabble, the products tend to get caught in the middle. So I think rather than getting caught up in something, they even said they could have kept trading it, they decided to pull it as an overabundance of caution. So hopefully sometime in the near future, we'll see this product back again so that we can actually talk about some volume and some prints and see how this is impacting the options going forward. Going on out to the VIX futures side of the fence, that there was a pretty broad gulf between the cash and that front month future. Obviously, that has come in a wee little bit these days. Right now, in fact, come in this morning, we saw the cash was a little backward premium there to the front month future. They pretty much lined up right now. They're both down to about a 13.10 now. So they're about even to the front D future, the Jan future. Looks like about 2 1/3 or so handles worth of premium out there from the cash. So interesting stuff. Mr. Meatball, anything catching your eye out there from a VIX futures perspective this week, sir?
Yeah, the curve is definitely moving around a lot right now. Very interested to see kind of, we've managed to have kind of a pretty steady contango through all of this. But, I'm really interested to see what we look like as the rest of this news comes out. I think it's going to be kind of fascinating. And I think it could absolutely drive, I'm trying to describe what it's been like. We've had this huge gap between the cash and the future. Then at the beginning of the week, that the futures don't really move very much, but that cash just swallows up that gap. And then here we are right back to where we were in terms of the cash, but now the futures have followed with it. So I guess you would say that the curve normalized, and that's where we've moved to.
Yeah, sounds like you moved into a library, too, with your hushed tones. I like it. So, people are reading. Next to you. Let's move on out to Spike's options land, see what's changed out there. Not a lot. Obviously, the futures being halted. People were looking forward to the futures. They were hoping to trade futures against the options and vice versa. We saw the options also tightening up with the listing of the futures. So the futures being halted has probably slowed down some of the efforts to start trading a little more out there on the Spikes. This open interest still pretty strong, about 63,000 contracts out there. Well, let's break down the top 5 out here. Hot positions in Spike's land this week. Number 1 with the bullet, the Jan 26s. Remember, our 1x2 friend rolled out to Jan last week. Listeners, about a week and a half ago. He's out to about 33,600 now for the number 1 spot in the Jan 26s. Number 2, 16,750 of the Jan 17. So he has adjusted that 1x2 a little bit. He was up to the 30 strike before. Now he's down 1726. 1x2, number 3, we got the D's 27s with about 8,600. Number 4, the D's 18s with about 4,300. So still the remnants of that 1x2 on in D's. He took it down. He was at 30 strike. He went down to 27 in D's. Now he's down to 26. So taking advantage of the continual erosion of volatility to roll that short leg, or the 2 leg, I should say, of the 1x2 That would not be the short leg. That would be interesting if that was the short leg. The 2 leg of the 1x2 down a little bit. Number 4 here, we've got the Dece 18s, 4,300, and number 5 are the Jan 18 calls. Let's go on out to VIX options land down. Actually, this week was a little bit of a reversal of some of the fortunes we've seen of late out here in VIX land. We've been talking for a while about kind of a whole heck of a lot of nothing from a volume perspective in VIX options land. We saw that ADV continue to erode got well shy of 400,000 at one point. Starting to reverse that a little bit this week. We saw a few active days this week. The ADV now creeping up back north of 400K, up to about 426,000. Coming into showtime, the top 10, the hot positions out here in VIX options land. Let's go from the bottom first. About number 10. Cost you about $1.50 to break into the top 10 in VIX land these days, which isn't a heck of a lot for VIX. We've seen higher. 151,000 gets you to number 10. The Dece 25 calls holding down the number 10 spot. Number 9, a fair number of puts here on the list today. The Dece 12 puts, 155,000 of those bad boys. 12 strike. Interesting choice. And number 8. Dece 20s, 173,000. Number 7, the Dece 16 puts with 181,000. Number 6, the Dece 15 puts, $1.88. Number 5, the Dece 13 half puts. Getting a bit of a trend here, listeners. 197,000 out here. Number 4, Dece 21 calls, 228,000. Number 3, Dece 13 puts, 242,000. Number 2, Dece 14 puts, 262,000. Number 1 with a bullet out here this week. Dece 12 half puts, about 268,000. Only 3 calls on the top 10, so 70% puts here, listeners. That should give you a little bit of a theme to what's been trading out here this week. Total of right around 7.5 million contracts outstanding. It's about 4.5 million on the calls and about 3 million on the puts. Let's go a bit backwards to start. So let's start at the beginning of the week and kind of work our way forward a little bit, see what was lighting it up out here. Monday was a fairly active. Pretty much most days this week were above the ADV, which is a little surprising. Monday was actually right at it, about 427,000. There looks like there was a bit of a funky put spread. Actually was a popular one throughout the week. These strikes were pretty popular. This Dece 12 half, 13 half put spread going up quite a bit. This one went up, looks like, for about 31 cents here, 20,000 times on Monday. That was kind of just the start of this put spread palooza that was going up this week. Also, 10,000, a lot of the D16 calls going up right off the bid for about 86 cents. And looks like maybe, I guess, an iron fly. Looks like a bit of a straddle versus calls and puts, so that would technically make it an iron fly, but you never know with some of these funkier prints in VIX land. It looks like it was the Dece 15 straddle going up 10,000 times against the Dece 12 puts for a whopping 7 cents, so a couple cents off the bid there, as well as the Dece 18 calls for 67 cents. So it looks like maybe they bought the straddle, sold the wings 10,000 times. Interesting stuff out there. Let's move on out to Tuesday. Tuesday was a more active day, 536,000 contracts. The big print was kind of a mid-market, maybe scratch of the Dece. I don't know about scratch, but taking them off. Let's see how well he did on these. Dece 42 halves going up for 7 cents, so kind of mid-market. Maybe someone trying to harvest a little bit extra, 25,000 of these. Actually, no. Looks like this was a spread. I take that back. So there was Dece 42 halves. Clearly, he's maybe keeping that love alive because he was rolling them out to the May doubles, all the way out to May for 21 cents. So he's going out to May, and he's going up 12 and a half handles, actually. And he's doing it all for a nice whopping 14 cents. Interesting. So clearly probably keeping a little bit of upside level alive. Again, kind of splitting the uprights there on the execution, so hard to tell, but probably maybe a bit of an upside swing for the fences over here. Dece 37 halves, also popular. Looks like a lot of people maybe taking some Dece off the table going into expiration week here. 24,500 of these going up for a nickel. Mid-market. This one actually also looks like it was a bit of a spread. I don't see the other leg here off the top of my head, but probably maybe rolling some of these bad boys. Dece 14 puts also going up for 62.5 cents. Old school print there. I like that. Going up for right off the bid there on for 20,000 of those bad boys. And more of this just put verticals are kind of the trade du jour this week. 12,500 of the Dece 13-12 put spreads going up for 20 cents. Yet again, people like spreads in that range. 12 half, 13 half, 12, 13 were kind of the order of the day. Wednesday, about 700,000. Wednesday was the hot day out there. The big print was, I guess you can call it That put spread also went up for size. The 12.5, 13.5 went up 50,000 times for, it looks like 32 cents. And then again, 27,000 more times also for 32 cents. So a lot of size on this 12.5, 13.5 put spread. 23 calls in Feb. So going out to Feb now, going up for $1.30, about 30,000 times, splitting the uprights there exactly, as well as some, if there was another theme this week, maybe some upside verticals in particular. It was like a Jan 2025 going up 28,000 times here with paper. Looks like maybe selling this bad boy. I'll have to see here a little bit. Again, the executions is kind of tight to begin with, so splitting the uprights makes it a little hard to parse on the fly. And then we also have, that was kind of the big prints for Wednesday. Again, 700,000 contracts on the tape, so hence why the ADV is creeping up. Thursday, we have about 471,000 contracts on the tape. It looks like a couple of interesting prints going up. D's put spread again, 12-13, going up 10,000 times for, looks like 32 cents. So kind of hovering in that range for a while out there. Also seeing some decent prints, 15,000 of the D16 calls, again for 62.5 cents, and the D13 puts going up for 36 cents right off the bid, 12,650 times. And then today is a pretty active day as well. Come into showtime, we saw 544,000 contracts on the tape, so very active, including what looks like maybe a put strip, put sweep, call it what you will, but the D14, 15, and 16 puts lighting it up through the offer. And these are late prints, so bear that with a grain of salt there. 66,700 times for all of these bad boys, again, through the offer on all of them. So that accounts for a large chunk of that over 500,000 contracts on the tape today. Also saw what looks like a bit of a funky, I guess you can call it not quite a risk reversal, a time vertical. Maybe it was a Jan 40 March double going up 7,600 times on the Jans by 8,400 on the March doubles, doing it for, it looks like about a cent. So pretty much even money there on that ratio, which is kind of fascinating. Mr. Meatball, a lot popping off this week. Weird stuff, a lot of weird put spreads going up in this weird put strip today. I'm not sure if you saw this put strip today, but if you know what they were up to, have at it, sir. And anything else out there catching your eye in this week's VIX options paper, sir?
No, it's been really, really slow. What was interesting was that, as all this was going down earlier in the week, nobody was in there hedging. And almost everybody was trying to set up a trade to take advantage of the curve, the curve tightening. Everybody wanted to make a bet on the December future pulling back down toward cash and the cash pulling in. That's really the basis behind all these put spreads. That's the basis behind most of this put strip. It's a really good good fit in general in terms of how everything merged. So not a lot of really curiously short on the amount of hedging we've doing. Although one thing that's been interesting is, was it 2 weeks ago that we had the kind of the discussion about the Ray Dalio trade where all those March puts he was buying?
Yes.
So, if you watch, I've had time to now think about the VIX futures. If you watch VIX futures, the February future has been a little bit bid relative to Jan and March. And that's also where we're seeing some of the bullish call action when it does trade. And if you're asking yourself, well, why is that? The answer is, February really expresses March volatility. So a Feb future expires in a March option. So one thing to think about when you're looking at VIX futures, if you want to know what's going on in the S&P in March, then you want to be looking at the Feb contract. If you want to know what's going to happen in Feb, you look at Jan. You want to know what's happening in Jan? Well, take a look at D. So right now, the December future is saying January could be kind of boring, but the February future is saying the end of Q1 could have some fireworks.
That would certainly be interesting as we keep on rolling. Well, as interesting is your favorite product you guys love to fade, of course, VXX, and that fading is working out. It was at about a 16 or so coming into showtime, puts it down about almost 2/3 of a point. It's actually off a little bit more now. It's down about 15.80. So that puts it off over 3/4 of a point from where it was last week. Also doing pretty decent paper out there at about 276 or so thousand contracts on the tape today. That's north of the ADV, which is already pretty lofty at around 270,000 contracts out there. So VIX, VXX, third time's a charm. VXX ADV is continuing to creep up, which is kind of interesting. This product obviously catching some people's imaginations out here. Look at what people are actually trading. Top 10 out here, and they're all pretty robust. Cost you about 34,000 contracts to break into the top 10 here in VXX these days. That would get you to the Jan 22 puts, number 9. Jan 15 puts, 40K. Number 8, D's 17 puts, 41,000. Number 7, Jan 15 half puts for 44,000 there. Number 6, 45,000. The Jan 14 puts. Number 5, D's 16 puts, 45K there as well. Number 4, the D's 23 calls, our first call on the list, 56,000, about 500. Number 3, Jan 26 calls, our final call on the list, 58,000 there. Number 2, 63,000, getting up there now of the D's 16 puts. Number 1 with a bullet this week again, pretty sizable OI out here. Number 1 is 70,000 of the D's 15 puts, almost 71,000 out there. So pretty sizable. The OI just north of 2 million now, about 2.05 million. That puts it at about 1.05 million on the calls and about $1 million or so on the puts. So pretty active stuff out here. Speaking of active, big prints going up pretty much throughout the week. Bigger prints today were 5,500. The Jan 21's going up on the bid. So maybe someone taking some 21 calls off. Actually, that's opening. So take that back. That's a bit of a vertical too. Jan 1921 vertical going up. It's like on a bit of a ratio, 5,000 by 5,500 times going up for, looks like about almost 16 cents or so. But again, they did it on a ratio. So those numbers are going to be a little bit off there. Mr. Meatball, anything catching your eye, or maybe more importantly, anything your crazies are up to, lighting up out there in VXX land, sir, as this product continues to go the way of the dodo?
Yeah, we've seen a lot of, kind of downside put paloozas, if you will. I know all of our customers have been trying to find smart, strategic ways to be long these things. And, I would notice that downside in January, there is a lot of open interest on a lot of strikes. Kind of the 15s and the 20s across the board are really bid. So there's a lot of OI there. So, yeah, people love this VXX downside, and it's been pretty active in both retail and we're seeing institutional, and which again would be why if you look at the ratio of long to short, you come up with a pretty strong argument for creating an SVIX product, right? It makes sense, right? If 50% of the open interest is long VXX puts, then there is demand for a SVIX product, and that is going to create some. That's why I think, at least until it blows up, it's going to be a pretty popular product. I think it's going to get some legs.
At least until it blows up. Just expecting the inevitable collapse. I like it. But you're right. I never questioned the demand. Just clearly from our audience, there's a demand for it. Obviously, the execution is where these things tend to fall apart. And it's one of those trades that works until it doesn't, right? And it didn't work at the end there for the XIV folks. We'll see if our SVIX or whatever they're calling it out there, if they can make it happen. Looking at what's popping up this week from, if you like micro, if you want to get away from the macro, look at the micro vol. We got a lot covered there for you. TheOptionsInsider.com is the place to go. Click on that Options News and Articles tab on the homepage. You're off to the races. Volatility, earnings move results reports, all that good stuff, courtesy of our friends over there in Orat's land. If you're checking that out, you can see names like GameStop and Dave & Buster's. They were popping off on Tuesday. Wednesday, Vera Bradley, American Eagle, Children's Place, and, of course, Lululemon, they of the sheer yoga pants infamy. Thursday was Costco and Oracle and Broadcom. So still some big names you have heard of popping off. Not a bunch going on today here, but, yeah, still big names out there to look at, to parse, to analyze. You know you guys all love it. It's all available for you there, free, TheOptionsInsider.com. So get on over there while the getting is good. Meanwhile, it's time for us to get going into your questions. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, your portion of the show. You take the reins, your questions, your comments, your snide remarks for the meatball, all that good stuff. Let's see how many we can get on here today. Let's start with Run Through. Run Through wants to know, it sounds like you guys are down on UVXY, and for good reasons. Last week's guest didn't exactly raise my hopes. I think he's referring to, I think this came in like a week or so ago, he's referring, I think, when Dave Lincoln was on the show, who was kind of, as I jokingly refer to him, the last of the Mohegans out there trading UVXY. He said, last week's guest didn't exactly raise my hopes. Is there anything they could do to get you back into the fold? Yeah, yes, quite clearly they could deneuter it, unneuter it, whatever you want to call it. They effectively, as we talked about on that episode, listener, the Run Through, they pretty much cut the legs out from that thing. It's a shadow of its former self, and therefore the utility of it is pretty much gone. That said, there still are some folks trading it, but not a ton. Remember I said the top OI position for VXX is around 70K. Looking here, let's pull up the numbers for UVXY. The top OI is around 30K, so it's not as anemic as you might think, but there's not a ton out there, and it drops off pretty quickly. The bottom of that top 10 is down to about 11,000. So still are some folks trading it. The number one position out there, in case you're curious, in UVXY right now is the Jan 20 puts with about 30K. Then it's the Jan 20 calls with about 27,000. So all sorts of interesting stuff out there. But yeah, UVXY, clearly they neutered it. And if they undo that, I am more than willing to re-examine my use case for UVXY. Mr. Meatball, is it the same for you? They pretty much just need to unneuter it and you'll go back to using it?
Yeah, one of the things that was really nice about UVXY in particular was that on a day-to-day basis, let's say in the morning, I wanted to get exposure to the cash VIX. Buying UVXY really did provide that on a, from if you bought UVXY at, let's say, 9 o'clock Central Time and sold it at 2:30 Central Time, and the VIX was up a point, you probably made $1 in UVXY. Or you made it in percentage terms. So one time that VIX percentage actually was worth a snap. If the VIX was up 10%, you probably made close to 10% in UVXY because it really did do a good job of tracking VIX. And that was really the key to that double leverage, is it kind of gave you intraday exposure to the volatility index. You just don't get that anymore with that 1.5 leverage and the neutering that they did to it.
Maybe those same guys who are proposing to create a new XIV will also create a unneutered UVXY, SVXY, and then everything will be good again. This startup will magically erase all of the concerns that people have in the volatility space. Oh, here is Migs, a timely question. I mentioned how many we've gotten of these over the course of the past year and a half. Here's another one. Migs, will we ever see XIV again? We'll see what we just talked about at the top of the show there, Migs. Hope you were listening, because it seems like there's something in the offing. I've heard rumors of people talking about it, but this is the first tangible, quote-unquote, product. I use that term loosely because nothing is official yet, but it got written about in Bloomberg. So there you go. That's about as real as it is, which is not that real yet. So it still has a long way to go, but there you go. It seems like there are some tangible steps towards at least trying to remedy that situation. Troms wants to know, will there ever be a way, yes, the old question, will there ever be a way to buy just the VIX index itself as an ETF or something rather than just the futures? Well, again, you're not the first to ask this question. You're not the first to attempt to replicate that. The most recent of that to come along was, of course, the infamous VIX up, VIX down type product, which had a pretty good pedigree behind it. There were a lot of people involved with it who had a strong understanding of the volatility space, and they started off in the early days. If you go back, listeners, when Whaley and others were really talking that thing up a few years back, they were promising exactly that. They were pretty much saying, we're going to make a VIX cash you could trade And then, as is with everything in this vol space, the devil is in the details. And then I think they realized as they were going about it, that's a much harder thing to deliver than perhaps they initially assumed. And so it ended up becoming this Frankenbeast of VIX up, VIX down. If you wanted good nighttime reading, that prospectus, the different distributions and everything, all these crazy steps and elaborate things they had to do to attempt to deliver that shows you, again, these are not unsophisticated people, and the lengths they had to go to actually attempt to deliver even a pale shadow of a tradable VIX cash were astronomical. They ended up being the undoing of the product. Also, there's a clear bias to VIX flow. People look at the VIX options. People want to buy the calls. They want to speculate to the upside. These days, the puts are pretty active, but that's kind of a rare occurrence. So you got to deal with that bias paper flow too. What do you do when all people want to do is buy the upside all day and they don't want to touch the downside? So there's a lot of things you have to do within that. And they came up with these very funky distributions, and clearly it wasn't the way to go because that product, unfortunately, and not exactly lighting things up anymore, shall we say. Mr. Meatball, this is kind of a frequent question we've received over the years. People just want that tradable VIX, sir, at the end of the day. Do you think we'll ever get it?
No, we will not. So here's the problem, right? I buy the VIX for 11. I sit on it. Oh, we got to pop to 20. I'm going to sell it. All right, well, who's going to sell it to you at 11? Who's going to buy it for 20? Who's going to take that down? And you know, there is stuff that can kind of be created around that in the over-the-counter space, like a variance swap. Maybe you could create an ETF that would be run a basket of variance swaps, but it would, you know, the amount of money you'd lose on a hold period, you would have this decay thing happen again, which is really the issue that you run into with anything. You know, I'll create you a VIX ETF for a monthly 10% management fee any day of the week. And that's really what you are talking about if you're trying to create a VIX product. Is you know, there's going to be for the issuer of that ETF, there's going to need it to be a giant management VIG that gets withdrawn from the fund every month.
It sounds like you're offering, sir, to be the guy who sells at 11 and buys at 20. Is that the service you're offering us, sir?
To this gentleman in particular, yes, if he pays me enough.
One man only gets that service. So there you are. What was the name there? Troms. You get to the buy to the meatball, I should say, from 11 and sell at 20. So get at it while the getting's good. Mars up next here. Mars, I like this handles. Mars says, happy holidays to the Vol Views crew. You guys always wrap up my week in style. Here's to a great next decade of volatility. Well, thank you for that, Mars. That's very kind of you to say. Glad we could bring a little light into your trading week out there. Right back at you, and all of you out there who've been sending us well wishes and holiday greetings. We love you all. You guys are the reason we do this. At the end, they've been doing it for 13, coming up on 14. Scary to say, almost 14 years of producing free derivatives-oriented audio for you folks out there. Haven't charged you a cent, so I'm glad you guys like it out there. Speaking of a decade of volatility, like he says here, Mr. Meatball, I was doing the show yesterday, the TWIFO show with the CME folks and one of their senior economists out there, and he made some interesting comments about the volatility he's expecting in the 2020s decade. And he noted that a large portion, the last few years, so notwithstanding, a large portion of the 2010s were pretty much a fairly low volatility period. And he said he expects, I think the exact quote from him was, much, much higher volatility in the decade that will be the 2020s. So interesting stuff out there from him. Mr. Meatball, did you catch that last portion of that there, sir?
Yeah, and I did want to say thank you to Mars for the holiday wishes and let him know how much I love his cheese castle and how it's maybe my favorite of all cheese-built castles. And yeah, I didn't catch the rest of what you said. I was just concentrating on Mr. Mars.
You were distracted by the cheese castle. I said we're doing the TWIFO show with a senior economist from CME yesterday, and he mentioned how the 2010s decade was effectively marked by mostly fairly low volatility, a few periods notwithstanding. And he specs, I think his exact quote was, I expect multiple muches higher volatility in the 2020s decade. There's something you can sign off on as well, Mr. Meatball? I think we're heading for a lot higher volatility in the future?
You know, when have we ever really had a decade with a crazy amount of volatility? That would be my question. We're always looking for it. We never see it. I guess the 90s the 2000s had some volatility, right? But the 90s really didn't. Maybe 99 did. Maybe 98, yeah, but it was upside. The 80s, kind of the same thing, right? It was just all upside vol. I'd be interested to see what the mean implied volatility is decade to decade. And I will bet you that the 2010s were not, if you throw out 2008, I'll bet you the 2010s look a lot like the aughts, and I'll bet you that the aughts look like the 90s. Because, I think that we think that 2008 is a lot more regular an occurrence than it actually is. To get that kind of a sell-off where the S&P loses 2/3 of its value, that's a once every 30, 35 years, isn't it?
Yeah, that's the problem with looking at, these decade-spanning frame of references, because you have these data points like 2008 or the VIX Apocalypse and a few other things that really just obscure everything else. So it does make it hard. This is where I would like to have the once in future Dr. VIX back on the program to pick his brain, because he's the guy he's the keeper of all that historical VIX data. Maybe I'll have to ask him about the decade-spanning comparisons of all things VIX. Check out the TWIFO program if you want to hear those comments in full. Meanwhile, it's time for us to get into the difficult, the dangerous, some may say the deadly portion. There's a reason why Simon isn't here this week. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the Crystal Ball, the portion of the show where we hold court on what we think is going to happen for the vol space in the coming week. And it was a pretty tight market we had last week. We were all feeling similar levels. I leave the caveat out of the rock lobster because he shamelessly carped me. And I laughed at him and I said, I bet you're going to carp me in the wrong direction. And he did. He carped me to the downside, and he should have carped me to the upside, because I came in at 1275, which is looking fairly good. We're at about a 1310 in both spikes and VIX cash, almost exactly 1310 in both, which is interesting that they're moving in such lockstep right now. So I'm a little bit off. I'm about 0.35 away, which normally would be a victory. Mr. Rock Lobster, I have to laugh at you because you carped me in the wrong direction. So nana boo-boo to you. But unfortunately, the Spikes father, who cannot be with us today, a.k.a. Simon from T3 Index, he went a little bit north of me. He went to the 13 level even, and he's looking pretty good right now because he's within our 0.10 exactly, which is where we determine that bullseye level. So I will doff my cap to you, Mr. Simon. You cut me off on the upside, but you gave me a little bit more room than the Rock Lobster did. I do believe you went first, so I will allow you. Maybe I did. I forgot. But either way, I'm more forgiving of Simon than the naked carping that the Rock Lobster was up to. So that's what you get, Mr. Andrew out there. You carp, you lose here on the program. So that means I get to go first, because Simon, of course, is not here. So let's look here. We're at about 1310 across the board. We're coming up in that weird kind of seasonal holiday time, listeners, where maybe the vol starts creeping out. People have been waiting for this trade deal to somehow come to pass. We've seen, quote-unquote, phase one of it come, so maybe that's going to start bleeding some of this vol out here as well. The holiday, of course, looming, could start squeezing some of that out as well if it starts kicking in next week. And next week wouldn't be that early. If you know much about how the holidays come out, it wouldn't be that early. The Brexit vote is already done. So there's not a lot screaming. Most of the earnings are kind of done. Not a lot screaming for a heck of a lot of upside from a vol perspective for now and next week. So I'm going to I'm going to lean a little bit south of where I am right now. But, I'm going to clip it pretty good. I was thinking 12 double at first, but I'm going to go a little bit farther now. I'm going to go all the way down about half a point to 12 and a quarter for this time next week. Some might say you can break the 12 handle. We shall see. I bet you the Meatball might lean that way. Mr. Meatball, how are you leaning for this time next week, sir?
I got to say, like at the top of the show, why aren't we already at 12 and a quarter? Why aren't we already in the 11s? If everything's so hunky-dory and we're so sure of everything, why are we still near 13 on the VIX? Why are we moving the way we're moving? I'm going to come out and I know I never do this. 13 and a quarter. 13 and a quarter, Mark. I'm giving you a whole point on the downside.
Wow.
I think
upside. I did not think you were going that way, sir.
And if I'm wrong, I think there's a strong possibility I'm wrong because I'm not high enough.
Wow, so an upside surprise lurking here for us. There are clearly many shoes left to drop out here, but this is a rare moment, listeners, when the Meatball is A, higher than me. That doesn't happen too often. Usually it's the other way around. And B, not fading vol going into a holiday or other type season like this. This is a rare moment. Perhaps, listeners, perhaps the canary in the coal mine for vol. We shall see next week. Unfortunately, that music means there's no more to see or indeed to hear this week, listeners. But before we go, Mr. Meatball, sir, if folks are intrigued, maybe they want to reach out to you saying, why are you picking 13 and a quarter for next week? Maybe they want to sign up for a vol newsletter. Maybe they want you to text them throughout the day with some fun volatility nuggets. Where should they go? What should they do, sir?
Yeah, you know what? Head to optionpit.com, sign up for our mail list, and make sure you check out the blog every day, optionpit.com/blog, and you will be happy. I personally am back to writing almost every day. I'm doing video content, and we have a webinar next Wednesday at 3:30 on how to trade the holiday season. I'll be showing and you know it's great because it's alliterated, Mark, my secret Santa strategy.
Ooh, I like it. I'm in. Is it $10 or less?
It is. It's at Five Below. That's how good it is.
Five Below. Check it out there, listeners. His secret Santa strategy. The only place you can learn about it, optionpit.com. Maybe that has something to do with why he's leaning to the upside here from a volatility perspective. And, of course, our friends over there in MyAx land, you want to learn all about spikes. Only one place to go, MyAxOptions.com/spikes. So just type spikes and MyAx, maybe MyAx and spikes into Google. It'll probably help you get there a little bit faster. You get this great overview page. You get the quotes. I'll just tick down, $12.97. Oh, I just waited a few minutes. He still would have won, but I would have been a little closer. You can find these quotes for spikes and everything else there, the futures, the press releases, when these things are coming back, all that fun stuff there, MyAxOptions.com/spikes. Also a link to a little program called Volatility Views, which you may or may not enjoy. And on behalf of our friends over there at MyAx and the Greasy Meatball and myself, I thank all of you for downloading and listening, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.